Hello, in this video I will teach you how to buy from here with super small stop loss and with high profit reward. This strategy will grow your nearly blown trading account to $100. I will also teach you how to buy from here using only one indicator. This trading strategy is so simple. And I will also teach you everything throughout the video. You will also learn how to make this insane sell trades with super small stop loss. Using only 200 moving average indicator to help us to identify a trend. So if you stick around, you will learn a trading strategy that you have never seen on YouTube for free. And finally you will learn how to sell from here. And what I like about this trading strategy is that you can decide your stop loss to be even 10 pips or less. And this trading strategy can work with 1-minute scalping and even the 5-minute scalping. So without wasting all of your precious time, let's begin with this trading strategy. Firstly, let's start by adding the indicator on a chart. For this teaching I will be using Tradingview to teach you this trading strategy. So on the top menu bar, click on indicators, then here on the search bar, search for moving average. Then click this one, then after that our indicator will be on the chart. But we need to change a couple of settings to make this to work perfectly. So now hover your mouse on the indicator and click to show this pop-up menu bar. Then after that click on the settings. Then on the input change the length to 200. Then now let's change the color to green because we will be making money with this trading strategy. On the style change the color to green and increase the line to the third one. Now that we have everything we need to get started using this trading strategy. So when price is above the 200 moving average we will look to trade bullish only, even when the price is touching the line. But to be on the safe side trade, only when it's above the moving average. Then when price is below our 200 moving average we will only take sell trades only. Okay, now one more thing, let me teach you how to draw supply and demand zones. Because we don't just want to enter a trade without a valid reason. In this section of the video I will teach you guys how to draw supply and demand zone in the simplest way so that you guys can understand. The first step is to identify an engulfing candle on a chart. For those who doesn't know what is an engulfing candle is candlestick that is bigger than the previous candle's body and also with momentum change. As we can see from this candlestick pattern, the bullish candle's body is bigger than the previous bearish candle's body. There are two ways to draw supply and demand zones. Now I will teach you how to draw a demand zone. On the demand zone we buy and on the supply zone we sell. I will also show you to make an entry using an entry strategy. Also remember to take notes because this is going to be important for your trading career. So the example on how to draw a demand zone. We draw the zone on the previous candle's high and low of the wicks. Another way to draw the demand zone is to draw the zone from the previous candle's open and to the low of the bearish candle, like on this example over here. And my advice to you guys is to use this only most of the time. Because it will give you a super small stop loss and high reward. Now pay attention because you will learn how to make an entry using supply and demand zones. This will also work in any market like Forex, stock market and more. So before we can confirm our entry we need to see at least one bearish candle like this one. And sometimes there can be a multiple candles before we can see a confirmation candle, before we can confirm our trade setup. Now that we have this bearish candle, for our confirmation candle we have to make sure that price didn't trade below our demand zone. Then the next step is to wait for the market to touch the zone, then wait for the market to close with a bullish candle on the zone. By doing so we will know that our demand zone is very strong to trade at. Now that we're done with how to draw the demand zone and already know how to confirm your entry, then now I will teach you how to minimize risk in 3 ways. From this example we can see that we have multiple bearish candles going to the zone. Then the market closed with a bullish engulfing candle. So if the market closed with a bullish engulfing candle on the zone, if you want to reduce risk, you will place a horizontal line on the previous bearish candle's open. In that case the market is likely to come and retest that price area. So that will be our entry. Then our stop loss will be below our demand zone. This is entry type 2. If price on the zone close with any candlestick that is not an engulfing candle, we will now put our buy limit order on the open of the bullish candle close. Like from this example. This will mostly give you a better entry. And mostly it will be sniper entry. The stop loss doesn't change from both entries. The stop loss will be below our demand zone. Before I show you how to draw the supply zone, I want to teach you something that you should avoid. So if price on the zone spiked below before confirming our entry, this will make the whole setup to be invalidated because there will be no way we could put our stop loss. So even if the confirmation candle spiked below the entry, then we will just leave that market and move on to other trading pair that will confirm our entries without invalidating them. Now moving on to the supply zone. On supply zone is just vice versa of what we did in demand zone. On all of this example, I drew the zone from the open of the previous candle to the high of the wick. What I mean is that I drew the zone on the bullish candle before the bearish engulfing candle. From this example here on the bearish engulfing candle entry is the same way on how we did on the demand zone entry. So from this example we just wait for the market to close with a bearish engulfing candle on the supply zone. Then we will put a sell limit order on the bullish candles open. Then the market might come and retest it to trigger your entry. On the second one, if the market doesn't close with a bearish engulfing candle on the zone, we will let the candle to close then. We will put our sell limit order on the bearish confirmation candle on the open of the bearish candle. Like I said before, this will give you a lot of sniper entries. On the third one is just the both of them, but this time we don't need to wait for a retest, we just enter with calculated risk. Because sometimes the market doesn't retest. But if you are smart enough, you can enter at the close as your first trade. Then put a sell limit order for in case if the market retests to trigger your second trade. Then lastly, before we begin with the trading strategy of the video. Now this is pattern you don't want to trade. As we can see, the market spiked above the supply zone. So this will make the whole pattern or signal to be invalidated. So if you like the video so far, please consider giving this video a like, as it will boost the video to reach more people. Now before I show you a couple of examples, if you like this video so far, consider subscribing to the channel because we post some amazing trading strategies on YouTube and you don't want to miss out. Also leave a comment and lastly share this video to your friends and family. On this example we can clearly see that price is above our 200 moving average. So the next step is to draw the demand zone on the previous bearish candle like this. Then the next step is to wait for the market to close bullish on the zone, then we enter the market with confirmation candle, then hold the trade for more money. Also don't forget to put a stop loss to protect your capital. As we can see, the strategy is always giving us super small stop loss, but the reward is big. So as we can see from here, we have small demand zone above our 200 moving average. Then the market closed with a bullish engulfing candle on the zone. So also we can see that the market also retested the previous candle's open. Now you see how powerful this trading strategy can be? Traders, now that we are nearly done with this video, I advise you go and backtest it yourself. Then you will see some insane trading results. Also, before I demonstrate this last two examples, from the first example we can see that price is trading below our 200 moving average. And also we can clearly see a supply zone over here. Then the market confirmed the sell setup with a bearish candle. So now we just enter and hold for more. And traders, remember, there is number 100% winning trading strategy, so always use proper risk management. Here on the last example, traders, we still see that price is still trading below our 200 moving average. So now we can also see our supply zone here. Then price touched the zone and closed bearish with a candle that is not a bearish engulfing candle. So now we will sell on retest or the close of the bearish candle. It's you as a trader who will decide on how to make a decision on the entries. But remember, the retest will give you small stop loss, but you will miss a lot of potential trade signals. So traders, I guess this is the end of our video. So I guess I will see you guys in another video.